Our club's always been a forum for visionaries, public figures, and decision makers to command attention to the issues of our time and inform the most relevant, compelling, and challenging conversations. Here we offer first-person access to dynamic political, business, and public personality.
The Canadian Club is one of the most important podiums anywhere in the world that a Canadian can speak to, tell Canadians what it is that they think, develop those thoughts. And so I want to thank you for that very, very much.
Please join me in thanking our esteemed panelists today.
Through our programs and events, including our youth and young leaders programs, our diversity partnerships, our joint events, and our media and social media opportunities, we offer you access to dynamic political, social, and business figures from abroad and right here at home.
The platform from which the eloquence of Canada has flowed all of that time, whether it be business, education, politics, sports, arts, and culture. If someone wants to say something to Canadians about this country and about the future of this country, this is the venue you choose.
Good afternoon again, and a very special welcome to those of you joining us online at CanadianClub.org. Una bienvenida canadiense a todos ustedes, y estamos encantados de tenerle con nosotros hoy, or any other day for that matter. My name is Glenn Parkinson, once again, Canadian Club Toronto President and your host this afternoon. Today's event is sponsored by EY, PwC, and Tories LLP, and we couldn't do it without you, so thank you for your support. I'd also like to thank our season sponsor, Canadian Bankers Association, Air Canada, our airline partner, and through our partnership with Canada's Forest Trust Corporation, our season is carbon neutral as they plant and maintain a forest in our honor. So thank you to Canada's Forest Trust. Last 2 points before we get underway. Canadian Club Toronto regularly invites young leaders to join us at our events, and today we welcome a table from Toronto Metropolitan University and Rotman School of Business, so welcome to you. Now, as many of you know, we like to make our events interactive and involve the audience, so take a moment to think about the questions you might ask, or the questions you will ask, to the President and CEO of Scotiabank. There are question cards in the center of your table, so you can jot down your question and hold it up, and we'll bring it up to the front. And for those online, there's a button on the right-hand side of your screen that says click to submit question. So if you obey the button and use it the way it's intended, we'll bring that question up here too. At this time, I am pleased to ask Tristan Cameron, Global Client Service Partner for Scotiabank at EY Canada, to join us at the podium and introduce our guests. Tristan, the podium's yours.
Great. Thank you, Glenn, for the kind introduction. Good afternoon, everyone. My name is Tristan Cameron, and I'm EY's Global Client Service Partner for Scotiabank. And I feel like in many ways, I was probably destined to work on Scotiabank because as a hockey mom for the last 15 years, I think I counted I spent almost 40,000 hours at Scotia Pond in North Toronto watching my son play hockey. So today I have the honor of introducing our guest speaker, Mr. Scott Thomson, President and CEO of Scotiabank. Scott Thomson assumed the role of President of Scotiabank on December 1st, 2022, after having served on the board of directors for 6 years. And in February 2023, Scott became Scotiabank's President and CEO. Mr. Thomson has spent over 20 years in executive leadership in industry. Prior to Scotiabank, he was the President and CEO of Finning International, the world's largest dealer of Caterpillar equipment and engines. Mr. Thomson has also held senior executive roles at Talisman Energy, Bell Canada Enterprises, and Goldman Sachs. Since Scott assumed the CEO role at Scotiabank, there's been a lot to celebrate. We were talking about some of that at lunch today. starting with Investor Day in December 2023, where the bank revealed a new strategy and vision to become their clients' most trusted financial partner. And in the past 2 quarters, the bank has shown solid momentum in delivering on its new strategy and vision to become their clients' most trusted financial partner. Scotiabank has also received numerous awards this past year, including being named Best Bank in Canada by Global Finance magazine, and Bank of the Year in Canada by The Banker, and that's for the 5th year in a row, if I'm right. There are many successes to highlight, but one other one I want to mention that's really important to me and near and dear to my heart is the Scotiabank Women Initiative. That organization has committed over $10 billion to women-owned and women-led organizations' businesses in Canada. Congratulations to Scott and the team of Scotiabankers. There are many of you in the room today. Scott was happy to see many of you, although he was asking about the productivity maybe for Scotiabank while everybody is here. So congratulations to Scott and the team. Really well done. Joining Scott on stage today is Stefanie Marotta, banking reporter at the Globe and Mail. In her role, Stefanie covers all of Canada's banking sector and the regulators. She's interviewed industry leaders at major events and conferences, and she shared her reporting on live television, as well as in radio and podcasts. It is now my great pleasure to welcome Scott and Stefanie to the podium. The Canada Club stage is yours.
It is nice to see all the Scotiabankers. It reminds me, though, when we had the craziness of September, and actually a lot of the Globe and Mail reporting around that. And I spent a lot of time with stakeholders, a lot of time with employees, and I remember this one session, it was all shareholders, except there was like 2 employees, and I kept looking to them for support as we were answering all these tough questions. And then I opened it up, which my employees and colleagues will tell me we always do, to have questions. And then the hardest question came from the Scotiabank employees.
It's a real pleasure to be here, Todd. Thank you so much for taking the time to chat with us. Fun fact, Scott and I actually started our current roles at the same time. So it's been a real thrill to follow Scott's journey and watch him work on this new strategy. Now, believe me, there's a lot to talk about. And so I think we should just dive right in, because I've got a million questions and not enough time to ask all of them. Now, in December, and about 10 months into his tenure, Scott launched a new strategic plan, largely aimed at reallocating capital to higher growth businesses, in particular across North America. So over the next few years, Scotia plans to redeploy a large chunk of its capital across Canada, the US, and Mexico. Now, that's because it believes it can take advantage of more than $1 trillion in annual trade between these 3 companies. And I've been dying to ask you more questions on this. So to start, let's bring this back to when you first started crafting this strategy. How did you tackle that, and how did you focus on these key priorities?
Yeah, so one of the things that was really important to me, the board, and my OpCo was to paint a North Star and paint a North Star vision. And Tristan mentioned it, the most trusted financial institution for our clients, but it wasn't also about being most trusted for our clients. It was being most trusted for our employees, most trusted for our regulators, most trusted for our shareholders. And that was the start of the vision of what we were trying to do. And then part of that trust building was making sure this was a collaborative process as we built that strategy. And so not only with the board, where I think we had 14 meetings in 1 year, but with all of the EVPs and the SVPs, where we actually poured through data in terms of how we were going to allocate capital going forward. And the conclusion of that was the strategy on December 13th, which we rolled out. And the components of that strategy were basically 4 pillars. One was the North American corridor. Secondly was primary clients. 3 was making it easy to do business with us. And 4 was enterprise-wide focus, win as one team. And as you think about that North American corridor, our view is to take a step back 30,000 feet, there's a massive opportunity across USMCA. You see $1.6 trillion of trade across those 3 countries. Trade flows increasing at 5% per year. You've got FDI, foreign direct investment, going into Mexico, which is second highest of all time last year. and a great starting place for us. So as the third largest bank in Canada, as the 10th largest foreign banking organization in the US, and as the 5th largest bank in Mexico with almost 3 million clients. That was a great starting point and a way for us to differentiate ourselves versus the other Canadian banks and other US banks, because there's no Canadian banks in Mexico, there's no US banks in Canada, and those that are in Mexico aren't overly effective because they don't deploy a universal banking strategy. And so that was the genesis of which we started the process of how do you connect our great Canadian platform with our international platform. Because one of the observations that we had is we had these great international platforms, we had this great Canadian platform, we had this growing US platform, but we weren't connecting those for clients. And that was the opportunity, particularly with multinational clients. So that was the North American quarter. The second pillar around primary clients, we're changing the philosophy at the bank from volume to value. I think part of all the financial institutions, not just Scotiabank, growing loan volume was the determinant of success, being the biggest, having the most scale in some of these countries. And what we're trying to do as a management team right now is value-based primary relationships, which we have a lot of, by the way, and I see a lot of the clients in this room right now, and I thank you very much for that. But we can do more. We can do more. We've got a great opportunity in our retail base in Canada. We've got a great opportunity in our LATAM businesses where we are well known, we're employer of choice and financial institution of choice in a lot of these places. We have a great opportunity in the Caribbean. We have 30% of the whole region's deposits in the Caribbean. So what a great foundation which to build out that primary client focus. The third piece is easy to do business with. We have an opportunity to digitize the whole back end of the bank so that we make it easier for our customers, better client experience, and also reduce costs. And then the last one, enterprise-wide thinking, win as one team. And again, I think all organizations deal with this, but we have a great opportunity to connect the different regions, the different products into a very client-centric approach. And so those were the 4 pillars of the strategy that we've rolled out. And so far, so good. We're starting to get momentum. We had a good first quarter where we did what we said we were going to do around primary clients, around profitability, around deposit growth, which is a big indicator of primacy. And again, we did it again in the second quarter. And so we need to keep doing that quarter after quarter after quarter so credibility goes up and we can re-rate the overall value proposition for shareholders.
Now you mentioned the first and second quarter, and you launched the strategy in December, and just recently we saw the banks report second quarter results. So now we've got a full quarter under your belt since launching this strategy.
Two quarters.
2 full quarters. I stand corrected then. I'm excited to hear the answer to this question then, because we've got even more data to back it up. So now that you have 2 quarters under your belt, what opportunities and challenges are you finding as you're working through this strategy? Is there anywhere that you need to pivot or anything that's happening faster or slower than you thought that it would?
I mean, I think just the philosophy change from, what's determinative of success. Is it volume or is it value? That's a big cultural journey that we need to go on as an organization. And you're seeing on the back of, SVB, the financial dislocation in the US. I think that's a lot of financial institutions are going on that journey, but that's something that we need to continue on through incentives, through coaching, through capability enhancement to make sure that we make sure the culture changes in that way as well. And so that would be, a precursor to success. I think though you're starting to see some of the check marks. We talked about profitability. Profitability was up across all regions. We talked about the importance of deposits and driving primacy. Deposits in our Canadian P&C bank, I'm looking at Terry Lee, was up 9%, in that first half of the year. When you think about capital deployed to our LATAM businesses, we said we were going to reallocate capital out of our LATAM businesses into that North American corridor. Capital was down year over year, yet ROE was up 150 basis points. So again, 2 quarters doesn't make a strategy. This is a long-term journey, but quarter by quarter, we're going to demonstrate execution.
So let's look at this in the context of the here and now then. And you're doing this in a very interesting climate for the Canadian economy. And yesterday we saw the Bank of Canada finally start to cut rates. Borrowers were very happy yesterday. But during second quarter earnings, you said that you expect higher for longer rates, and that's going to affect Scotiabank's ability to perform, not necessarily its ability to perform on the strategy, but that it's going to affect borrowers and it's going to cause rising credit risk. So with you rolling out this strategy in this moment in time, how do you see this playing out over the next few years?
Well, it was really important that we had a resilient balance sheet. because we saw the macro headwinds in front of us. And so when you look at the last year and what we've done on the balance sheet, taking capital from 11.3 to 13%, $1.1 billion of performing allowances to build our ACL provisions, liquidity ratios of 130. We prepared that balance sheet to withstand the macro stresses. We are starting to see the macro stresses in our Canadian business in particular, where the consumer is weakening, and that is what was behind what the Governor of the Bank of Canada did yesterday. I think there is a divergence between what you're seeing in Canada and the US. Our expectation is that this isn't the start of the easing cycle in Canada, and you probably see another 75 basis points through the back half of the year. And the US is still performing really well, and that is a higher for longer scenario. We do expect that the US will reduce rates in the back half of the year, but it won't be as much as Canada, and it will be a little bit later.
Now, I'd like to come back to Canada, but let's talk about Mexico for a second. And this is one of the really fun things about covering Scotia is we get to talk about Latin America, which is absolutely fascinating. Now, something really interesting happened this week. Mexico elected its first female president. Yes. She's also a former climate scientist. And there's a lot of uncertainty in that country. She's taking over during a tumultuous period. The economy is slowing. Morgan Stanley actually just cut its outlook on Mexican bank stocks based on the uncertainty around government policies to come. So how do you plan and work through your strategy as this uncertainty evolves in Mexico?
Well, a couple things. One is we thought about capital reallocation, and we were very open to our shareholders about this. The first port of call was Canada, the second port of call is the US, and the third port of call is Mexico. And the reason that was in that order is because of some of the uncertainty that's inherent in that market in the short term. What happened earlier this week or over the weekend wasn't a surprise. Claudia Sheinbaum won the presidency in an overwhelming majority. That was expected. What wasn't expected was the Congress and the fact that the Moreno Party got a supermajority in the Congress, and that's what's created a little bit of the uncertainty. So you've seen the equity market trade off a little bit, 2%, the peso off 4%. But our expectation, we saw this in 2018 with AMLO when he came in, the institutions prevailed in an environment where the Moreno Party had a supermajority. That's point one. Point two is this is a long-term strategy, and the nearshoring opportunity in Mexico, the requirement that Mexico or China gets replaced in that supply chain to the US is imperative. The amount of capital that is coming into Mexico long-term is real, and so that is going to provide opportunities for connectivity in that market. It's 25% of the world's GDP, 500 million people, $1.6 trillion of flows. And look at some of our clients, TransCanada Pipeline, CP Kansas City, Magna, Enbridge. Everyone's going in this North American corridor, and we want to be there to support our clients longer term. And so we'll be thoughtful about capital allocation in the short term. I think the USMCA is another important pillar. You're going to have to make sure that Mexico addresses, some of the border issues, that Mexico addresses some of the security issues, and that Mexico addresses some of the China investment issues in order to get over the hurdle on USMCA. And I suspect that will happen because I think Claudia is a different leader than AMLO. And she's got we met her last week. She's an impressive individual, and I think she'll do great things.
What was your impression of your meeting with her?
I didn't meet her. Francisco met her. And Francisco was in Mexico 2 weeks ago. He thinks she's different than AMLO. I mean, she grew up under AMLO. Former board member of ours, Susan Segal, I talked to her yesterday, who knows Claudia well. They have high hopes. They have high hopes. I mean, she's a very rational individual who, yes, had left-leaning growing up through the academic institutions, but is very smart, very rational, and will get Mexico to the right place under USMCA. She understands the importance of China investment in Mexico for the US, so I suspect you'll see the first issue she'll address is that China investment.
That's fascinating. I'm curious, with Prime Minister Justin Trudeau, he had a conversation after President Sheinbaum was elected. And from the transcript, it said that they discussed agreeing to commit to North American competitiveness. So from the conversation that Francisco had with her and from what you're observing so far, what do you need to see from Canada to boost competitiveness and to work alongside Mexico?
Yeah, I mean, I don't think this is necessarily just a Canada-Mexico issue. I think this is a Canada issue. And if you look at productivity, which we're all talking about now, but it's a real issue. The GDP per capita of Canada over the last few years has decreased 2.5%, whereas the US has increased. And that divergence is increasing significantly. And if you kind of look underneath that and say, well, what's driving that? It's the investability into Canada. The capital flows into Canada are not happening. The stat that was just shocking to me was Canadian firms, for every dollar of investment per worker in the US, Canadian firms invest 50 cents. Think about that massive gap between the US and Canada. And so then what's driving that, and how do we address that as a nation? I think there's a big part of that is interprovincial trade barriers. A big part of that is regulation, permitting. A big part of that is, we come to the energy transition, I'm sure, but the attractiveness of Canada as a place to invest for international and our own pension funds, which I'm sure we'll talk about as well.
And on that productivity piece, I'd love to hear more about that. Considering that Canada's productivity has fallen back to 2018 levels, what needs to happen to entice more investment in Canada?
Yeah, I think you need the interprovincial trade barriers is a big issue. I think you need to make, as you think about what we've done here, we've grown the GDP through increased immigration and labor, whereas the US has grown their GDP through capital inflows. And so that creates a challenge for productivity. And so we need to make Canada a place where people want to invest. And it's been really eye-opening for me in this job over the last year and a half to see our clients making choices between investing in Canada or the US, partly because of the regulatory environment. And so real estate clients who are coming to us and can't get things done in Toronto, yet they can get it done really quickly in the US. And I felt the same way when I was in the mining and oil and gas space. The permitting requirements to get things done in Canada are difficult. So we have to make it easier for our clients or our customers to operate and invest into the Canadian economy.
And there's also the piece about pension funds, and there's a big call for them to redouble on investment here rather than abroad. So what's your perspective on that dynamic? Why has that shifted so far, and what can we do to bring it back?
Yeah, I think that's a tough question, right? Because I understand both perspectives in terms of the pension funds wanting to have the world to invest in, and Canada's a small part in the world, and they're ultimately determinant on returns. On the other hand, I understand the other perspective where the productivity is lagging and investment is required. And so, what I think we need to do is we need to provide opportunities for these pension funds to invest at scale in attractive returns that they want to do it. And for me, the energy transition is the perfect example. We have an opportunity here to be a leader in Canada on the energy transition. We have world-class energy companies with a lot of capabilities and innovation. We have a developed, stable regime. What we need to do, in my mind, is we need to decarbonize fossil fuels aggressively as we can. We need to incent renewables, wind and solar. We need to embrace nuclear. We need to use natural gas as a transition fuel and as a basis for blue hydrogen, ultimately leading to green hydrogen. And if we do that, we had a national policy or a national priority on the energy transition and made it attractive for the pension funds to invest in that, that would be a home run. That would be a home run. Get capital into the system, you'd reduce emissions, you'd increase productivity, and we have that opportunity. We have that opportunity.
Whenever I have conversations about the energy transition, there's always two sides of the debate that comes up. One side is that it's not happening fast enough and we need to move much more quickly to have the impact on the earth that needs to happen. The other side of it is that if you divest too quickly, if you move out of it too quickly, that has implications for the job market, for the economy more broadly. So where do you sit on those two sides of the debate, and where do you think it should move towards?
Yeah, I think we've got to move off of the emission reductions at all costs, and we've got to embrace a comprehensive strategy that looks at all energy sources. And if you get back to what I just talked about, decarbonization of fossil fuels, embracing nuclear, incenting renewables, embracing and encouraging Ontario Hydro, Quebec Hydro, BC Hydro to invest in transmission and distribution, you get to the right answer. And I would also say it's just not a one-sided debate. I mean, we're all focused on supply. You also have to focus on demand. You know, if you don't focus on both, you're going to be in a situation where demand increases, someone else substitutes for the supply of Canada, and that's a bad outcome for everybody. And so if you have a balanced policy focusing on supply and demand, as well as a comprehensive strategy around all energy sources, which is attractive for people like the pension funds and others to invest, I think that's a great outcome.
So seeing that Scotiabank is on the front line of this, what are you hearing from your clients as you work through this dynamic? How are clients moving towards an energy transition, and what needs to happen to get them to continue to move towards that?
I think they're really trying hard. Like if you look at Quebec Hydro as an example of what Michael Sabia is doing on a bold, ambitious plan to invest $100 billion. Danny, is that it? $100 billion of capital on transmission and distribution, right? That's an ambitious plan. When you look at the oil sands clients who are trying to move to carbon capture quickly, when you look at the nuclear industry, I see Blake there, in terms of trying to embrace that. And we've got some Canadian champions trying to do that. But we don't have a holistic, comprehensive plan that addresses the fact that it just can't be emission reductions at all costs. It has to be comprehensive, and it has to embrace natural gas. It has to embrace natural gas because that's the transition fuel that allows us to get both reduced emissions, maintaining our GDP, and getting to the other side of this.
Now, sticking on productivity, I have to indulge myself and ask a little bit of a bank nerd question, just being the banking reporter. And capital requirements in the industry have risen significantly, not just with OSFI ramping up CET1 requirements in the DSB, but also in the US as we start to navigate Basel III requirements. There was also a Scotiabank analyst note, actually, from your banking analyst that tried to explore the question of, are higher capital requirements at the lenders impacting productivity? So what's your perspective on that? Are they impacting productivity, and should capital requirements be lowered?
Yeah, productivity, if you come back to my thesis around productivity, you actually need capital into the system to allow companies to grow. And we'll just use Bank of Nova Scotia stats. We will keep it away from the industry. But if you think about what we've done since I took over, we've grown our capital from 11.3% to 13.1%. And if you work through all the risk densities, et cetera, that's $180 billion of lending that has come out of the system from one bank, right? And you see that in our results. You see loans, mortgages decreasing, commercial banking flat, and we're not alone. Every bank is going through that. So for Scotiabank, it's $180 billion. Times that by 5 or more. Now, 180 billion is internationally, so half of that, say, $100 billion for the Bank of Nova Scotia. So this is a real issue. Particularly as we're now coming into potentially a downturn when actually our clients need that capital. So that would, I'd say, one thing. The second thing is the debate in the U.S. is raging. I was there in Washington yesterday about whether Basel III gets implemented or not. And so based on what I heard yesterday, I think there's going to be some pretty significant reforms to the implementation of Basel III. And so that would be interesting from a competitive dynamic if US was one place and Canada was at a different place. I think the regulator and the government needs to be sensitive to that.
That's interesting. So what was your read on that dynamic in the US? Why are you starting to see that start to shift?
I think there's an election coming up. On the back of the financial dislocation I think there's different views from the regulators in terms of what caused that. There was an aggressive stance taken by the Fed on capital, and there was pretty significant pushback by the industry in terms of the threat of litigation if the regulator was going to go forward with that. And then ultimately you had a disconnect with Fed Governor Powell and Mr. Barr. And so that connection has led to a little bit of a stalemate in terms of implementation. So we'll see where that plays out over the next year. I suspect it will be somewhat linked to the election. But it's pretty clear the full implementation of Basel III is not going to happen in the US.
And considering that Canada's kind of gone in the complete opposite direction, moving full force towards Basel III, do you think that the US changing its approach to it could also influence how Canada approaches it as well, or should it?
I think people will have to be thoughtful about that, because you wouldn't want to have our biggest trading partner at different capital requirements than the Canadian banks. But I think that's something that OSFI and the government are well aware of.
In terms of the North American Free Trade Agreement that you mentioned, that's a really interesting one. Canada's already started mapping out its strategy for the review that's coming up in 2026. And to your point, we have not only a US election in the in-between before we get there, but we have a Canadian election as well. So how do you navigate that, and how do you shift? Do you need to shift your strategy at all, depending on who ends up coming into office in those two regions?
I think this is something that caught us off guard as a country a few years ago when Trump first came in, and now that won't catch us off guard. And I also think the Canadian government did a really good job navigating us through that, and we ended up in a great outcome. I don't think there's a lot of risk between Canada and the US from that trade agreement. I do think the Mexican angle makes it a little bit complicated depending if it's President Trump or President Biden. I think in a President Trump government, there's going to be a lot of sensitivity to the China investment that I talked about. I think there's a lot of sensitivity to the border and immigration, and then there's a lot of sensitivity right now to the drug trade, the cartels, and that coming into the US. And so, back to our point on Claudia, I think President Sheinbaum is going to have to address all three of those over the next couple of years to make sure that we all get to a good place on USMCA. The importance of USMCA cannot be overstated. I mean, that is a massively important deal for all of us, and I think all three countries recognize that, and so I'm confident we will get to the right place.
Now, we've talked a lot about Mexico, but we can't talk about Mexico without also talking about Latin America. And something that you've said a few times is that in the international business, the risk hasn't been commensurate with the returns, and that's dragged on Scotia to a certain extent. So when you look at the Pacific Alliance in particular, there are still some areas, in particular in Colombia, where the return on equity is still quite stunted. And you said during at Investor Day that right now the focus is on sort of remediating those areas, but that you could potentially see some divestment at some point. So give us an update on the timeline. At what point do you think investors will find out more on whether or not you're going to divest from some of those areas?
Well, the first thing to note, the platforms that we have in some of these markets are unbelievable. Right? I mean, we are the third largest bank in Peru, we're the third largest bank in Chile, we're the fifth largest in Colombia, fifth largest in Mexico, biggest in some of these countries, like biggest international, at least in a country like the Dominican Republic. So we have a great platform. We're the employer of choice in a lot of these markets, and we've got a good business. I think the challenge is we've allocated a lot of capital to these businesses, and the returns, to my point, haven't been commensurate with the risk. And so then the question is, how do you address that? And the plan that we've put in place is around a regional structure where we run these countries all together so we can reduce the cost base pretty significantly. And the commitments we've made on costs, $800 million reduction over a 5-year period, you're starting to see that come through despite the inflationary environment. You actually saw costs down. And this focus on primary clients. We've primarily focused on mortgages and corporate. And what we need to focus on is the segments we want to deal with in terms of wealth, high value, and a more holistic relationship with that client, so it's not just a monoline product. And if we do that, we can actually close that gap in those markets of 400 to 500 basis points of ROE. And again, the first couple quarters, I was so pleased to see that improvement start to come through. The challenge is they're going to do that without more capital, because we've allocated a lot of capital. We've allocated a lot of capital that needs to be recycled to actually focus on the segments we want to focus on. And I believe we can do that, which will result in optionality for us in terms of how we take those businesses forward.
So that brings me to the how. To your point, without an increase in capital in those businesses, how do they approach that? How can they achieve that without extra funding?
It's around, you're going to have to do a client deselection, right? I mean, we've got, again, this is the volume versus value. We've taken an approach where you've put a lot of balance sheet into clients that don't have a relationship beyond the balance sheet. And what we need to focus on is doubling down with primary clients who we can add value to beyond just the balance sheet. And that comes to advisory, that comes to markets business, that comes to wealth. And we can do that. We can do that. We have the capabilities to do that, or we can build the capabilities to do that. We don't need more capital in these businesses to do that.
Now, I'd like to take this to the US for a second, and particularly your global markets business, because I found that part of the Investor Day to be really interesting. And I was actually lucky enough to take a trip down to Wall Street a couple of months ago, and I got to meet with a number of the Canadian banks in the capital markets divisions there. What an incredibly competitive space, and it's one that's so integral to your connectivity plan with North America. So tell us about the strategy in the US, in particular with the global markets business. How do you compete in such a competitive market? Are there niches you focus on?
One of the things I think the team has done a great job is building out that presence in the U.S. And so we are now the 10th largest foreign banking organization in the U.S. It's 10% of the overall net income of the company. We've built out the capabilities that I talked about beyond the balance sheet, and so we've got very good debt capital markets capabilities. We've got FX capabilities. We've got ECM capabilities. And so we're able to provide our clients with a holistic relationship. In fact, and I know I'm cherry picking, but I'm allowed to once in a while. There was a couple months ago, we were 26% of the flow in DCM in the US, higher than any other Canadian bank, right? And so it's that kind of ancillary business, capital light business, that allows you to develop a holistic primary relationship with your client. We can do that. I think we can do that in the corporate level. We can do that in the mid-market level. Ultimately, in the US, I would like to grow into commercial. I would like to grow into wealth. We have a great opportunity to connect those businesses across our platform. So when you think about wealth, we've got a business in international that's growing at 20% per year, but they need capabilities, offshore capabilities in the US. Same with our Canadian wealth clients. We need those US offshore capabilities. If you look at commercial, 30% of our commercial clients in Canada have operations in the US. 20% of our Mexican commercial clients have operations in the US. So bringing capabilities to those clients to be able to connect to our overall platform is going to be a priority over the next 5 years as well.
So you mentioned wanting to grow those commercial and wealth businesses. How do you do that? Are there any acquisitions that you have your eye on? Had to try, right?
So not in the near term, right? I mean, right now we've got a massive organic opportunity in front of us. There's capital constraints that we're all dealing with as an industry. But over time, would we like to grow inorganically in the U.S.? I think that would be on the table. That would be on the table for us. Like I said, over time. And we really need to be thoughtful about making sure we have the capabilities before we do that, right? You need to make sure that you're meeting all the regulatory requirements. AML is an example. I know that's topical right now. We've invested $1.6 billion in AML over the last 5 years. And that's how much effort is required to make sure that you have a system, and that's evolving, that's continuing to grow. Particularly when you're thinking about the North American construct, where you have Canada, U.S., and Mexico. So, it's an investment over time, and it will be over time that we'll think about doing that.
Well, call me first when you do. Now, you mentioned AML, and it's no surprise to anyone in the room. One of your closest competitors is having quite a time with an AML situation. And you mentioned that you were just down in the States, and there's been a strong call from U.S. regulators and Canadian regulators for banks to increase their AML support. So what's your perspective on the other Canadian bank that's fallen into trouble in this segment, and how are increasing requirements in this area going to augment or change your plan at all?
Yeah, I'm not going to make any comments on my peer bank, but what I will say for us is this is something that you have to continually invest in. And back to my comment on the $1.6 billion over the last 5 years, and we've got a much smaller operation in the U.S., right? We've got 3,000 clients, no retail operations. And so it's a much different scenario than some of our peers who have retail operations. But this is complicated. You need to be, best in class on the technology front, and you need to make sure from you have the controls internally from a cultural perspective.
Now I'm going to take a question from the floor, and I think this might be from our Rotman TMU table, so if it is, shout out to the students. Good on you guys for submitting a question. The question is, advice for aspiring bankers with AI and all the change that there is there a viable path for students to get into the industry in this environment?
Listen, AI right now is changing the way banks think about the future. This AML issue, as an example, we've just had a long board conversation around how do we accelerate AI into AML to make sure that you're using best-in-class technologies. So we have a great data team under Grace Lee. I think the number of students we hire each year and the capabilities that we have are really impressive. And so if you want to drop your resume off, happy to take it at the front door. But AI is going to change this business. It's going to first change it on the cost side in terms of being able to run things more efficiently, and then ultimately it's going to change it on the revenue side. And so definitely we're going to be leading the pack on that.
Students, I hope you guys take them up on that. Said as a former branch teller that's exactly how it worked out for me, so do it. Now we've got another question. After a year and a half as CEO, what are your biggest surprises and lessons learned from your time in leadership?
Yeah, I mean, I think one of the surprises, which I think probably all financial institutions face, given how long they've been around, but just the product-centric focus as opposed to the client-centric focus. And I think the whole industry is on that journey of systems and incentives to drive client centricity. And so that is the journey that we are on as well. But you can imagine the bank to a client is just the bank. It's not, a mortgage provider or a commercial provider. And so we need to meet our clients with their expectations of how they want to be served. And that product-centric focus needs to change to more client centricity. So that would be one thing. I think it leads to the second opportunity we have is just the way we operate. And I think, again, all companies have this opportunity, but less siloed-based and more enterprise-wide focused. And I see Alex Becherat, who's one of our most senior executives in wealth. The opportunity for our wealth business to coordinate with our Canadian banking business and drive a great outcome for our clients and our shareholders is so massive. But you can only do that if we're connected. And that's something that we're working on as a team every day, is create the right incentives, the right capabilities so that we are connecting for a better client experience.
Now, to bring this back to the strategy for a moment, something that comes up often in investor circles, and I believe it came up on a recent earnings call, if I'm not mistaken, is Scotiabank's share price. So this is a multi-year strategy, and the share price is up year to date, but it is still negative on a 1-year, 5-year, and 10-year basis. So at what point could investors expect the strategy to spark a turnaround in share price performance?
I mean, in my perspective, the share price is connected to your return on risk-weighted assets or your ROE. And so as a management team, we need to make sure that we're allocating our scarce resources to drive that profitability up and grow net income at the same time. As I said, I think the first quarter and the second quarter are an indication of that execution. And if we can continue that, the share price will come. So I feel really good about where we are today. We've got a credibility gap to build in terms of execution. We're going to name ourselves the bank of no surprises going forward. But if we can do that, be the bank of no surprises, develop the credibility, develop the consistency, we will get that credibility, which will result in a re-rate and an improved share price going forward.
Now, I'm going to combine the theme of these questions that I just received, and I'm glad this came up because this is a topic that's near and dear to my heart as well, and that's diversity and inclusion. And I recently wrote a story about how there's an upcoming CEO changeover, and there are really no women in sight to become the next CEO of a major Canadian bank. And the stats on representation only worsen when you consider people of color, or people with diverse needs. So what's your perspective on DE&I at the bank, and why haven't we moved the needle far enough yet?
Yeah. So one, I think the financial industry is ahead of other industries, and the culture internally with 90,000 Scotiabankers, this is front and center. And that's, I feel fortunate to be in a company with that kind of culture that's driving it forward. But there's obviously work to do. And, you'll notice that, well, you haven't noticed, but we're rolling out our cultural framework in the next few weeks across the 90,000 Scotiabankers. And, one of the pillars is inclusion. And my view is that people bring their best to work when they can bring their whole selves to work. And we need to create that culture. And by the way, we do have that culture, but it's always, you can do better. You can continue to improve to make sure that we create that environment, culture where people can thrive. I do think we're making progress, on the female initiatives. I now have, on the female journey, I now have 3 female executives reporting to me on my OpCo. I think we have relatively good stats, room for improvement always. We've got work to do on the Indigenous file, for sure. You know, we've got you know, a significant journey as a country, but as an industry and as a bank, on making sure that we create the right opportunities for Indigenous employees. And we've been relatively successful at attracting. We have not been successful at retaining. And so we're working hard to figure out how we can create that type of environment where people can thrive within Scotiabank from that community. Cedar Leaf Capital, I could not be more happy with. You know, the establishment of Cedar Leaf Capital, which is going to be an Indigenous owned and operated dealer broker. We announced it. I think we announced it. Did we announce it?
I'm recording this, right?
Okay. We announced it a couple months ago. I think this is a game changer. I think this is a game changer because it allows this dealer on the back of foundations of Scotiabank to actually attract talent and make the Indigenous community successful and then ultimately own the outcome. And so for me, that's something that I'm most proud of what we've done in 2024 today.
Now, I could ask 1,000 more questions. We are a smidge over time, but if you had 30 seconds just to leave the room with some final thoughts, what would they be?
Well, since half of the room is Scotiabankers, we want to win. We want to win, and we're trying to create that culture and that environment where we're going to compete, we're going to win, and we're going to deliver for all stakeholders. And I can feel the momentum. I can feel the momentum. Engagement, our Scotia Pulse results were up significantly year over year. Our leadership, views of leadership relative to the values and the behaviors that we're espousing was up 5 points year over year. And so we have that momentum. It all starts with the how. If we get the how right, we'll do the what. And then your question on TSR will be a different question.
I'm looking forward to asking you that one again. Thank you so much for taking the time with us, and thank you for being here.
Okay, well, I know that I'm in between you and going back to work and your next meeting, so I'll be quick. My name is Yair Weisblum. I'm PwC's Global Relationship Partner for Scotiabank. And on behalf of the Canadian Club Toronto, its sponsors and the audience, Scott and Stefanie, I wanted to express our deep appreciation and thanks, Scott, for sharing your vision and your perspective, and Stefanie for your moderation. Great questions. You really gave them the hard ones, so fantastic job of guiding the conversation. And Scott, as somebody who supports the bank, it was really inspiring to hear your vision and your plan on being the bank. Being the bank for the customer, the primary customer, as well as how you're building out the North American corridor business. Fantastic. I'm sure, just like everybody here, we're all very excited in seeing a very successful execution of the plans. Also, I wanted to point out that we're really appreciative of you calling for more investment in the energy sector, and specifically in energy transition and our infrastructure to support our growth ambition and productivity, and stressing how important it is from a North American perspective to have integration across all these countries. So again, really, really great insights, and thank you for that. With that, I'm going to turn it over to Glenn. Oh, there's Glenn, who's going to close it out. Thank you.
Terrific. Thank you, Yair. Thank you, Scott and Stefanie. I want to highlight 3 things of upcoming events and then some instructions on how to get back to your office smoothly this afternoon. 3 events coming up in June. June 12th, we've got the CEO of TELUS, Darren Entwistle, with us. June 13th, Minister Seamus O'Regan is here to share the latest from the Ministry of Labour and Senior Citizens. And then on June 19th, we've got the CEO of Interact, Jeremy Wilmot, joining us to end the season. See CanadianClub.org for more details. I would like to thank VVC Live for our AV support today, and one more time for EY, PwC, and Tories. Now, just as we get ready to go back to the office, there is an impromptu gathering in front of the hotel. So if you want to get back to your office smoothly, 2 strong suggestions. One is you can use the path. You can also go out the east door closest to Bay Street, and that'll be smooth for all of us. Thank you to everyone in the room and online for joining us, and we look forward to seeing you again soon. Bye now.